Hello, everyone. Welcome to the market opening bell for Tuesday, July 8th, your 10-minute guide to the stock market. The market continues to monitor U.S. tariff negotiations. Hong Kong stocks were soft on Monday, with the Hang Seng Index opening 87 points lower and dropping 202 points early to a low of 23,713. The decline narrowed to 5 points in the afternoon, reaching a high of 23,910, but closed down 28 points or 0.1% at 23,887, marking three consecutive days of decline. Cumulative drop of 333 points or 1.4%. The H-share index fell less than 1 point to 8,608, while the Hang Seng Tech Index rose 13 points or 0.3% to 5,229. Total market turnover was 193.7 billion Hong Kong dollars, significantly lower than the previous day's 267.8 billion dollars. Southbound funds saw a net inflow of 12.066 billion Hong Kong dollars compared to 6.683 billion the previous day. Notable net buys included Tracker Fund totaling $2.499 billion, Meituan 717 million, China Construction Bank 621 million, Tencent 542 million, ending 25 days of net selling. Kuaishou 530 million, SMIC 511 million, Xiaomi 328 million, Alibaba 284 million, Guotai Junan International 254 million, and Innovent Biologics 247 million. Net sales included PopMart $235 million. Southbound funds have net bought SMIC for 12 consecutive days, totaling $9.074 billion. Innovent Biologics for 7 days, totaling $2.289 billion. And China Construction Bank for 3 days, totaling $848 million. Technically, the Hang Seng Index held above last Friday's low of 23,691, but risks testing the 50-day moving average unless it breaks above the 10-day and 20-day moving averages. Mainland Asia's opened lower but showed mixed performance. The Shanghai Composite Index edged up less than 1 point or 0.02% to 3,473, while the Shenzhen Component Index fell 73 points or 0.7% to 10,435. Combined turnover in Shanghai and Shenzhen was 1.2085 trillion yuan, down 220 billion yuan from the previous day. The renminbi US dollar central parity rate was set at 7.1506, up 29 points. Food delivery wars benefit tea drink stocks. Meituan and Alibaba's Ele.me have reignited a subsidy war. On July 5th, both platforms offered large coupons, including 16 off 16 and 18 off 18, effectively enabling zero-cost purchases. Netizens reported buying a Luck-In coffee for just 2 yuan and a McDonald's breakfast for 7 yuan after discounts. Meituan and Alibaba reported over 120 million orders for Meituan delivery and Meituan flash purchases, and over 80 million for Taobao flash purchase and Ele.me on July 5th. Alibaba aims to hit 90 to 100 million daily orders within 2 to 3 months to challenge Meituan's dominance. Meituan's stock fell 1.5%, while JD.com and Alibaba rose 0.5% and 0.3% respectively. The coupon frenzy has sparked optimism for tea drink stocks, with Mi share surging 5.7% to 543.5 Hong Kong dollars. Cha Bai Dao soaring 11%, Auntie Jenny up 5.7%, and Guming rising 6.2%. How long can power stocks stay hot? High temperature drove national power load to a record 1.465 billion kilowatts on July 4th, up 200 million kilowatts from late June and 150 million kilowatts year on year, boosting Hong Kong's power sector. Higher temperatures increase thermal power generation, and with coal prices under pressure, thermal power firms benefited. However, high temperature demand is seasonal. Forecasts project 2025 power generation at 11.6 trillion kilowatt hour, up 11.2%, and consumption at 10.4 trillion kilowatt hour, up 5.9%, yielding a supply-demand ratio of 89.6%, below historical averages, indicating a loose market. Coal prices have trended downward this year, while northern power plants face smaller tariff cuts, improving profitability compared to southern plants. With spot coal prices cheaper than long-term contract prices, firms with lower long-term contract reliance have greater profit elasticity. Thermal power firms' profitability will likely remain divergent. US President Trump announced on Truth Social that his new tariff rates letter, effective from August 1st, imposes a 25% reciprocal tariff on Japan and South Korea and 25% to 40% tariffs on several countries, including Malaysia and Kazakhstan. Additionally, Tesla CEO Elon Musk's formation of a new political party to challenge Congress contributed to a U.S. stock market decline. The Dow Jones Industrial Average fell as much as nearly 670 points, closing down 422 points on or 0.94% at 44,406. The S&P 500 dropped 49 points or 0.8% to 6,229. The Nasdaq fell 188 points or 0.9% to 20,412. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, rose 43 points or 0.6% to 7,431. Alibaba, however, declined 2.2%. Musk announced the formation of the America Party, aiming to secure 2 to 3 Senate seats and 8 to 10 House seats to act as a critical minority in contentious legislation. Trump called it absurd and ridiculous. Tesla plummeted nearly 7% with its market value dropping by approximately 68 billion US dollars in a single day. Other tech stocks were mostly soft, with Apple down 1.7%, Nvidia down 0.7%, and Microsoft down 0.2%. The market is also focused on the Federal Reserve's release of the June meeting minutes on Wednesday to gauge policymakers' views on interest rate trends. Our stock pick today is China Gas, stock code 384. China Gas is one of China's largest cross-regional comprehensive energy supply and service enterprises, primarily engaged in investing, constructing, and operating urban gas pipeline infrastructure, gas terminals, storage and transportation facilities, and gas logistics systems in China. It delivers natural gas and liquefied petroleum gas (LPG) to residential and industrial commercial users, builds and operates compressed natural gas (CNG), liquefied natural gas (LNG) refueling stations, and develops and applies technologies related to natural gas and LPG. Through years of development, China Gas has established a diversified business structure led by its pipeline natural gas business, complemented by LPG, LNG, smart energy services, gas equipment and kitchen appliances, and a new retail model through private domain store commerce. As of March 31st, 2025, the group has secured 662 pipeline gas projects with exclusive rights across 30 provinces, municipalities, and autonomous regions, along with 32 long-distance natural gas pipelines, 488 CNG LNG refueling stations for vehicles and ships, one coal-bed methane development project, and 120 LPG distribution projects. Despite multiple challenges in China's macroeconomic environment, such as increased employment pressure, weak consumer spending, strained foreign trade exports, and unresolved real estate risks, domestic apparent natural gas consumption has maintained steady growth. Since September 2024, a series of incremental economic stabilization policies have been introduced. In 2025, ultra-long-term special treasury bonds have been intensified to support dual priorities: construction with a focus on urban underground pipeline network upgrades. Central budget investments in 2025 prioritize urban underground pipelines and facilities. Additionally, the state continues to promote old pipeline network renovations, rural revitalization, and energy structure optimization, creating new development opportunities for gas companies. Looking ahead, the group aims to position itself as a green city operator under the strategic framework of the National Dual Carbon Goals, focusing on energy storage business development for industrial commercial users. It will horizontally integrate non-storage energy businesses such as photovoltaic power generation, electricity trading, and electric vehicle charging to build a multi-energy complementary system, providing low-carbon, diversified energy solutions to clients, with the goal of becoming an industry-leading comprehensive energy service provider. Over the past two fiscal years, China Gas has maintained a dividend payout ratio exceeding 80%, based on the dividend of 0.5 Hong Kong dollars per share for the 2024-25 fiscal year. The current dividend yield is 6.4%, which is more attractive than the below 5% yields of China Resources Gas, ENN Energy, and Town Gas Smart Energy. Recommended buy price is 7.65 Hong Kong dollars. Target price is $8.5 and stop loss is $7.3. I do not hold the aforementioned stocks.